Hi there. Great news for Rivian shareholders. The stock price went up over 40% in just 1 month, especially in the last few days. The stock price went from $10 to $14 in just a few days, an increase over 40%, and this is quite amazing. As you probably know, this happened because of the partnership between Rivian and Volkswagen Group. They announced plans for technology platform joint venture. And Volkswagen Group plans to invest about 5 billion in Rivian. And when the market saw this great news, the stock price went up more than 40% in just a few days. 5 days. And this is amazing. Because as Rivian has almost 8 billion in cash, and you add on top of that another 5 billion, they will have in total, almost 14 billion. And these are enough funds to fund their operations and expand their business, especially for Rivian. And that's why the stock price has increased so much. Now the question you should ask is if the stock price can increase even more in the future. As you can see, the market cap is almost 12 billion. And you have to ask the question if the market cap can more than double from the current level to go to 24 billion. If that can happen, then you as an investor or shareholder will do well in the future. If not, you know the answer. So you have to look at this partnership and understand it. What will happen in the next years? As you can see, this investment, total contributions from Volkswagen Group is 5 billion. But they won't invest all their money right now. But of course, as you can see, the market overreacted. The price went up a lot, over 40% in just 5 days. As you can see, this year, Volkswagen is planning to invest only 2 billion. First, in convertible notes in Rivian, be aware of this, and then a payment at inception of joint venture. Then next year in 2025, they will invest, Volkswagen will invest another 1 billion in equity investment, and in 2026, they will add another 2 billion equity investment plus debt in that joint venture. So you have to be aware of this because the stock price, the market cap of Rivian is based a lot on their cash that they have on hand and future opportunities. Because with this new partnership with Volkswagen, they might gain more customers, more opportunities in Europe, because as you know, Volkswagen is a company from Europe, and they might expand their market there, especially for the new venture. So when you look at Rivian, as I said, the market cap of 12 billion, you have to ask the question if it can double. Because if you look at the first quarter for 2024, you can see that Rivian delivered 1.2 billion in revenue, 1.2 billion, but the cost of revenue was over 1.7 billion. And the net loss they reported was over 1.4 billion. And this is quite bad because even though they have a lot of cash on hand, they have new partnership, joint ventures. If Rivian can't increase their revenue and deliver a profit in the next 5 to 10 years, then investors won't do great. You have to understand that. But as I said, with this new joint venture, Rivian is well positioned to attract more opportunities. And of course, with so much cash on hand, to invest in their business, in infrastructure, and deliver better products and services in the future. They have more chances, more tailwinds. So they might succeed. The stock price may rebound back to $20, $40 in the long term. But for that, they have to work a lot. And they have to manage their investments, especially the cash on hand they have. As you can see, 5.9 billion plus 1.8 billion. They have to manage well this cash to invest in good projects, not to waste it. If they can do that, and you can rely on the management, then you'll do well as a shareholder, as an investor. As I said, they have almost 7.9 billion in cash. And be aware that they also have some debt, long-term debt of 4.4 billion. So the net cash, if you subtract the total debt from the total cash, is about 5 billion. And on top of that, you add the investment from Volkswagen Group of 5 billion. So 10 billion. And you look at the market cap, is well priced, of 12 billion. But you have to ask the question, as I said, if they can become profitable, if Rivian can become profitable and increase the revenue. If they can do that, then don't expect too much from Rivian. They can have a lot of partnerships with other companies, not only Volkswagen. They might also partner with Tesla. But if they can't improve their operations and deliver a profit, then your investment won't do great in the future. You'll only have those ups and downs in the stock price. 1 month, the stock price may go up 40%, and then after 1 week or 2 weeks, the stock price may go down, back to $10 or even lower. That's why it's quite important. So this partnership, this joint venture, is quite great for Rivian, especially for Rivian. Because as you can see here, if you read this partnership benefits, the partnership is intended to focus on software, electronic control units, and related network architecture, design and development, with Volkswagen Group planning to utilize Rivian's zonal ECU architecture and software stack beginning in the second half of the decade. This is quite important, to utilize Rivian's zonal ECU architecture and software stack. If Rivian can do a great job to deliver this architecture and software stack, and Volkswagen is pleased with what they do together, then this partnership may attract other car companies from Europe, for example, or the US. If that can happen, then Rivian will be well positioned if they can develop this architecture and software stack, because more companies will want to build on this architecture, on this software stack. So Rivian may transform itself from a car company in a software company. It can do both things, to be a car company and a software company. And especially nowadays, they have to become a software company. Every car company has to become a software company so that they can survive, to compete better with other car companies, especially Tesla. And of course, Chinese companies. But now with the new tariffs, they are more protected, especially the US companies. So this partnership opens a lot of opportunities for Rivian. And this is great. Of course, you also have to look at the risk, because the stock price in the short term went up quite a lot, over 40%. But in the long term, you have to be aware of their final profits, if Rivian can deliver a profit. So far, if you look at their tailwinds, their opportunities, the cash they have on hand, they are likely to succeed. But you also have to track their performance and look at their earnings, final earnings, net loss. When you see a decrease in their losses, that's a great sign. And of course, an increase in the revenue. That's a great sign that Rivian is on the right track, on the right path. If they can do that, then you'll do great as a shareholder. But also be aware that this market cap of almost 12 billion is based, most of it, on their cash in the partnership with Volkswagen. Because as you've seen here, their ending cash balance is almost 8 billion and total contributions from Volkswagen is 5 billion. So in total 13 billion. And you look at the market cap of almost 12 billion, is about the same. So the market considers that with so much cash, Rivian will be able to invest in infrastructure, expand their business, and they'll maintain this cash position. And that's why the market cap is priced at this level. But be aware that if you look at their balance sheet here, you can see that this company is burning a lot of money. Look at this, cash and cash equivalents. They have decreased from 7.8 billion to 5.9 billion. And their debt is about the same. So this is great. This is a good sign. But be aware that they are burning a lot of money. They have to invest in new facilities and develop new products. And that will require a lot of cash. And when this cash of 5 billion or almost 6 billion, plus you also add short-term investments, when this will decrease, then also the stock price, the market cap, is likely to decrease. But if they succeed to increase the revenue and reduce the losses, report a profit, become free cash flow positive, then Rivian can maintain its market cap of 12 billion. So you have to be aware of this valuation, because the future of Rivian looks great, especially with the new partnership, but you also have to be aware of the price you pay. Because if you buy the highest peak, especially right now, when the stock price is about $15 per share, then you might end up losing a portion of your money. If they can manage efficiently their cash to invest in good projects, in good infrastructure, then yes, in the long term, Rivian may do well. But if they can handle their investments well, then you as an investor won't do great. That's why management is quite important for this company. Not only those great news, new partnerships or other opportunities. So if you have other questions, please let me know in the comments.